Hey everyone, it's Will from Nittany Mortgage. I'm here with Tyler and Noel from Realty One Group Landmark. We're here today to talk a little bit about some mortgage myths and the facts that are surrounding those. So Tyler, thanks for being with us today.
Thank you for having me.
Yeah, we're going to go over quite a bit of information today. For those of you out there watching, if there's a topic that you're curious about that perhaps we don't cover today, feel free to drop a comment and we'll do our best to cover that in a future video. We're going to go ahead and kind of get into this. So Tyler, we're going to have some back and forth today, and like I said, cover a lot of topics. So we'll get right into it.
First one.
Yes.
Let's talk about, do you need 20% down to purchase a home?
That's a great question. So no, of course, that's kind of the old adage from the maybe 80s and 90s when we were all growing up. Everyone thought you needed that full 20% down, which these days with home prices, going ever higher every single year, that is a little bit more unattainable now than it had been in the past. Yeah. Fortunately for all of us, no, you do not need a full 20% down payment. Now, there are certain products that it benefits you to do a 20% down payment. However, whether it's conventional, VA, FHA, USDA, even some non-conventional products, that is simply just not the case. We can go as low as a 0% down payment with certain programs we have available, whether that's a USDA or a VA. Conventional for a first-time home buyer with certain limitations, of course, we can go as low as a 1% down payment. So, we've got a lot of tools out there for just about any client as far as, what your needs are. We, generally speaking, have a product to meet that.
Nice.
The next question is for you, and that's about renting versus home ownership. And, is it more expensive to own a home? Is it more expensive to rent? Are you wasting money when you rent? Things of that nature.
It's a great question. I mean, it's, the ultimate goal, one of the American dreams is to own a piece of real estate, and it can be very much obtainable, as we just talked about. But, it can be very savvy to own a piece of real estate, especially if you're paying for, building your wealth in the future, rather than paying someone else's mortgage and paying for their building or home, whatever it may be. It's definitely more satisfactory to own your own place, as well as piggyback off of that. There's so many things that you can then do once you own your piece of real estate. Like building a portfolio. Then you may own a house and eventually be able to use some collateral in that house to buy a second home somewhere.
Yeah, absolutely.
Whether it's in a beautiful Florida town somewhere or just maybe another rental property down the street. It can be so savvy to own your own place and have that for the future.
Yeah, absolutely. And like you said, with building that equity, you can leverage that for, say, like you said, an investment property, but also just some home improvements and turning that maybe fixer-upper or starter home into your dream home that's your forever home. So,
yeah,
absolutely.
I think that's a great thing to add to that. This may not be your forever home. So starting somewhere, getting some equity built so that you can essentially take that first home that you have and then move it into your next forever home with building that wealth.
Absolutely.
So question for you, Will.
Yes.
Do you need perfect credit to buy a house?
No. That's another common myth, and something that maybe when we grew up, that was kind of the mindset when it came to that if you don't have perfect credit, you will never buy a house. You can't buy a car. You can't do this. And that's just simply not the case these days. Now, there are certain restrictions and limitations when it comes to credit scores and the information that's contained within your credit report. But by all means, you do not need to have perfect credit. We have a lot of programs available that can go down to a 580 credit score. And with certain mitigating factors, we can sometimes actually go below that. Now, that's not always the perfect situation and can come with perhaps a little bit higher of an interest rate. However, those who are on that path to credit recovery, sometimes they think they just simply can't buy a house at that point. They delay that process, kick the can down the road. They think maybe 5 or 10 years from now, maybe I'll be able to finally buy a house. And again, that's just simply not the case. And we don't know until we know. So my recommendation is always get with a lender. That way we can look at your credit report, see what all is on there, see where your scores are, and maybe give you some tips or guidance on how to improve the scores if you're below that threshold, or give you some really good news that you weren't expecting that, hey, we can get you a house right now, which that's one of the most rewarding parts about my job is, unlocking the ability that people maybe didn't realize that they had to be able to buy a home.
Fantastic. Another question for you here. Pre-qualification versus pre-approval. What's the difference?
Yes. So a lot of times people use those terms interchangeably. That's not necessarily technically accurate. Typically, we're doing what's called a pre-approval. A pre-approval is where we take a little bit deeper of a dive into your financial profile, if you will. We're doing a full credit check. We do income analysis, asset analysis, whereas maybe you find an online lender that just simply gives you pre-qualification. They'll do a soft pull on your credit. They'll take the information that you put on the application about income or assets. They do a quick 30-second review of it, and you're pre-qualified. Now, that's great and can be very convenient. However, we found a lot of times that without taking that deeper dive, they're not maybe uncovering some of the roadblocks or speed bumps that we may come across further down the application process, which once you're under contract on a home, there's a lot of pressure, there's a lot of stress. That's the last thing you want to deal with as a home buyer, is your lender saying, hey, we might not be able to get you approved now, or we need to make a major change to this process and jump through a lot of hoops in order to get that approval done. That happens in this industry. No client is the same. Nobody's truly perfect. However, we prefer to uncover those potential issues earlier on in the process. That way we can plan accordingly for it. And maybe that means we need to delay your purchase by a month or two to get a couple things sorted out. Or maybe that just means, hey, we know we're going to come across this. Let's prepare for it now. That way, when inevitably it does come up in the underwriting process, we're ready to go. And that's just, par for the course at that point.
Yeah, I think something really important to think about also, if you are that buyer and you're either working with a lender that does pre-quals or pre-approvals, if you're going up against another buyer for the same house, and if let's say I'm the listing agent for that house, and I have A buyer and B buyer, one has the same number, same price, same contingencies as B buyer, but one is a pre-qual and one's a pre-approval. I, as a listing agent, I'm talking to my sellers that, hey, this pre-qualification is a little bit different than a pre-approval. And, they've taken a bigger dive and leap into maybe uncovering some skeletons that someone may have in their closet. You need to understand your buying power then with what is a pre-qual and a pre-approval and what it looks like to a listing agent or to your sellers.
Right. So. And again, especially because as a consumer, you may not be privy to that information, that there's a difference between a pre-qualification and a pre-approval. A lot of people do think that those are one and the same. And like you said, they're just simply not. And one can be much stronger than the other as far as presenting an offer to a seller. For our final topic today, Tyler, you've worked with, I don't know how many hundreds of buyers over the course of your time as a real estate agent, but I'm guessing some of them have, maybe been, say, denied for a pre-approval or even for a full mortgage application. And once they get denied, sometimes they think they're out forever. That's a black mark on their financial picture. And, hey, I got denied for a mortgage a year ago or 6 months ago, and sorry, but I just can't buy right now.
Yeah. I mean, there's nothing more heartbreaking than falling in love with a house and finding out you're denied your pre-approval and you can't move forward with making an offer. And so with that being said, I think it's important to, before you fall in love with that house, talk to a lender, talk to Will at Nittany Mortgage, and find out, hey, am I pre-approved for this house, before we fall in love with that house, and maybe have some sleepless nights about it. But it's really important that, just because you were denied a mortgage, maybe with, some other mortgage company out there, it doesn't mean you can't, in a short, timely manner, restore that credit or build that credit with a new mortgage company to then start back into that home buying process and fall in love with that house all over again.
Absolutely. So, mortgage companies don't just look at your credit report when it comes to whether you're approved or denied for a loan. They're looking at your income, the level of your income, but not just that, but your job and employment history, your asset history. There are so many factors that go into an approval or denial, of course, that even some small changes can really make drastic impacts on whether or not you are going to get approved for a mortgage. So again, having someone take a look at it and sit down with you and actually talk through that process and where you may have had issues in the past, what you've improved since then, or what you can improve going forward in order to unlock the ability to get approved for that mortgage and, of course, become a homeowner.
There you go.
Which is the name of the game and what we all love about this job.
Absolutely. Thanks, Will.
So, wonderful. Well, hey, thank you for all of you who are watching out there. Like I said at the beginning of this, if you have questions or if there are any topics that we may not have covered today that you're curious about, drop a comment, and like we said, we'll do everything we can to cover that topic in another video down the road.
Yeah,
So,
appreciate it,
Tyler,
Will. Thank you.
Thanks for coming
Good
in today.
seeing you, brother.
Yeah, absolutely. So we'll see you next time. Thanks.
See you guys.